Let me tell you something. There is no nobility in poverty. I have been a rich man and I have been a poor man, and I choose rich every fucking time. Because at least as a rich man, when I have to face my problems, I show up in the back of a limo wearing a $2,000 suit and a $40,000 gold fucking watch.
Welcome everyone to Regular Investor, Jake the Stock Guy podcast. My name is Garrison Smith, one of the pro traders, part of the Jake the Stock Guys trading group. I have Jake with me today, and I also have a very special guest. It goes by PupOfWallStreet on Twitter. Also, name is Danny. How are you doing today?
I'm doing well. How about yourself?
Doing great, man. Doing great. Jake, how are you doing today, man?
I'm doing good. I'm doing good. I'm glad to be here and be able to talk to the one and only the Pup of Wall Street. Which, by the way, Danny, how did you come up with that name?
So there's a guy, Scott Melker. He's the Wolf of Wall Street, and of course that was taken. Oh, sorry, the Wolf of Wall Street. And I just, I love the movie. I'm also born and raised here in New York, and so I have an affinity for New York. So I thought, I'm also a creative. I own a design company. And so my creative hat went right on, and I'm thinking, what variations of the Wolf of Wall Street or the Wolf of all Streets can I come up with? And at the time, I was still I was trading, but I was a young trader from that perspective, and I thought, well, what's the young of a wolf? It's a pup. So that's where kind of the pup came in. And honestly, I'm no longer a pup from that perspective, but it stuck, and that's what everybody calls me. So
That's great. Yeah, once you throw a name out there, or once you pick a name and it metamorphosizes over the time, you're kind of stuck with your name that you gave yourself. It's funny how that works. So you're born and raised in New York. Why don't we just start off kind of casual, like, Danny, why don't you tell our audience, and for those who are listening, where you kind of, like, what's your origins, your origins story, if you will?
Sure. So, I kind of got struck a little early, in my career. Well, not even in my career, and just growing up as a teenager. Grew up, pretty much middle class, and I remember watching my father every Sunday, keeping his. I first started off as a kind of a journal note, like a lined rule page notebook, then turned into an Excel spreadsheet of him managing his positions, whether it be in individual names or mutual funds that he was invested in. And so that really synthesized with me pretty early on. Fast forward, when it came time to graduate high school, I've always been pretty independent. Played sports in high school, very competitive, and I come from a family of people that serve. My father was in the Army. His two brothers, one was in the Army. Two of his brothers were in the Army, and then his other brother, my godfather, was in the Navy. And I always remember that movie Top Gun and Tom Cruise and how cool he was. And as a kid, I'm like, man, that's pretty cool. I'd love to do that. And who would have thought, watching that movie, that just, a number of years later, I'd be joining the Navy out of high school and doing my stint to serve my country. And by the time I got out, I had really good discipline. I had a pretty good head on my shoulders. I mean, I could have went to college. I could have gotten into a pretty good school, good GPA, good SAT scores, all the nine. But I got struck with wanting to travel. And so I joined the Navy and traveled the world and saw a lot of things, and came back with the mindset of, man, I want to do something for myself. I knew I had to work. I knew I had to work for somebody, but I wanted to do my own thing. And, for a couple of years, I was working just odd jobs, just trying to figure out what I wanted to do. Got a job at Kinko's. I don't know if you remember that company. It was later bought by FedEx and integrated into their system, but it was a printing and shipping company. And they used to do a lot of printing jobs. That got me into the design world. I picked the printing department's people's brains. My father he was a human resources director for a vitamin company. He was able to talk to their art department, get me copies of Photoshop and Illustrator. And that started me on my entrepreneurial journey. And from there, I started my first business, grew that. That led me to around 2008 when the housing market, burst. And at that time, I had started a new business with a partner of mine that I had met through my prior business, and I had money, and I didn't know what to do with it, and the market had crashed. And so I thought, wow, what a great opportunity to learn how to trade. And so I was day trading without knowing any technical analysis. I made money, I lost money. I actually still have a couple of names that I held from way back when, penny stocks, because of course everybody gets into penny stocks first because they're cheap, right? They can go up the most. And that was my first real experience, my first world experience with trading. And as my business grew, I just didn't have the time to spend, learning the market and studying the market. So it wasn't really until 2017 where, crypto came onto the scene in a big way. And I started dabbling in Bitcoin and Ethereum and Cardano and all of the big names that were being thrown around in that mid 2017 run. And, I made a good amount of money, but I didn't sell a lot of what I had. And so I also lost a lot of the gains that I had gained. And that really brought me to where I am today, because at that point I'm like, man, I wish I would have known technical analysis, because all the people I was watching were showing charts and they were showing how they knew when to get in and when to get out. And I thought, wow, that's really cool. I need to learn that. And so from 2017 till about mid 2018, 2019, it was my cut my teeth period. It was learn technical analysis and really study the fundamentals of how to dissect a chart. And coming from the design world, I really had the eye to kind of find the patterns within the charts. And so I became really proficient with breaking a chart down. And then just in 2019, I came across a platform called TrendSpider. And that was like a marriage made in heaven. I was able to use that platform. It was a beautiful platform, really aesthetically pleasing, and produced really nice charts. And it really spoke to my inner designer and to how I felt I was as a trader. And the rest, as they say, is history.
That's something I really want to get into today is charting. I use TrendSpider, I believe, and I'm a very technical analysis person. And I just want to go over like some of the most important steps, or like any important things that comes to charting, and how you draw up plays, draw up charts, and look for the next big play.
Yeah, I think I look from a multi-time frame analysis perspective. I always start at the top. So if you have a company like Apple or Microsoft that's been around for decades, I might want to look at the monthly chart. And I know we're recording this on just the beginning of March. And so over the weekend, I was looking at monthly charts. I wanted to see where is February's monthly charts going to close on the names that I watch. And so whenever I'm looking at a name, whether it's something that's in my watch list or a new name I'm exploring, I always start at the highest time frame that makes the most sense. More often than not, it's the weekly chart. And then I have my steps of doing my multi-time frame analysis. I'll always draw out all my charts from the weekly down to the daily, down to maybe a 65-minute to a 30-minute, down all the way down to a 5-minute. And I look for all the patterns. I want to see where is RSI, especially on the higher time frames. Are there any divergences setting up? I always look at the TTM squeeze. Are there any squeezes set up? Are there multi-time frame squeezes setting up? I always like to see when there are lower time frame squeezes, potentially with upper time frame squeezes also setting up. That generally will cause a cascading firing effect depending on which direction we're going in. I use moving averages. So I use different moving averages for different time frames, but mostly the daily and the weekly. I'll look at the 21 EMA, the 50 SMA, and the 200 SMA on the daily, weekly, and above. But below, like 65-minute and below, I'm using an EMA stack of 8, 21, 34, 55, 89. There's a rhyme or reason between those names or those numbers. They're all Fibonacci numbers, which also infers the other thing I do a lot of, which is fib work. And so I'm looking for Fibonacci levels. I'm looking for retracement levels. I'm looking for extension levels. I'm looking for projection levels. I'm looking for timing. And so, between those few things, along with some anchored VWAP, whether it be from the swing low, the swing high, the year to date, any potential major gaps, that's kind of the tools that I use. Notice I don't really talk a lot about indicators. I will use RSI or the Williams %R for divergence plays, but I don't use them to trade daily. I don't use stochastics or MACD. Again, I'll use them for divergence strategies, but they often on the lower time frames will give you false signals. And on the upper time frames, I'm only going to use them when I'm looking for confluence. I want to know what the story is before I even look at the indicators, because then when I look at the indicators, I want to be able to let those indicators confirm or deny exactly what I'm seeing. But I would never solely take a trade off of let's say a MACD crossover or an RSI breakout, so to speak.
And that's one of the most important things when it comes to me is I like to use definitely moving averages. Moving averages, I love channels, I love patterns. I like to see or know. Like I love the market to repeat itself, and I always look for patterns. Patterns is one of the main things I use to always get into a play.
About all the indicators you use, and I was trying to say if I had to take away all your indicators and you could only use one, what would that be?
Well, I don't really use that many indicators. So you could pretty much take them all away and I could just trade off a price action. For me, it's all about price, right? Price is your number one indicator. So take everything away from me. I just need price. Just tell me what the price is and let me see the chart, and I'll draw out my support and resistance lines, and I could just trade that way. That's pretty much how I trade from a day trading perspective. Just tell me where the price is. I'll tell you exactly where the breakout level is, what my targets are going to be, what my stop loss is going to be. So take it all away. I'm good with that.
What would you say is your, and I agree with you on a lot of points, like everybody kind of does get their start in penny stocks because they're so cheap, and you're just kind of learning. A lot of people who are novice and just stepping into the space. A lot of the friends I know, they actually, I'm only 32, right? So a lot of my friends are my age or a little bit older. So a lot of these guys and very few girls, there's just not really there's not too many female traders. I don't know why. It's mostly a male-dominated sport or game. But, I know a few female traders. But a lot of people start off with, like, Timothy Sykes' course, or there's a guy by the name of Ross Cameron who runs Warrior Trading. He's got quite a big following. He's also a big penny stock guy. And I think there's a lot of penny stock gurus on Twitter. But do you just trade stocks? Do you dabble in options contracts? Futures? Do you have a particular niche that you primarily focus in, or are you kind of multi-versed? And follow up to that is what would you say is kind of your shtick or your strategy or your formula that you've kind of carved out for yourself that allows you to take more money out of the market than you give back?
So I'm more of a less is more kind of guy. I don't do a lot of scanning outside of scanning within my watch list. So the first thing I'm going to be doing is setting up my watch list. Now the watch lists are going to be mostly tech heavy for the most part, with some ETFs, or pretty much all the ETFs. And what I do on a daily basis, and certainly on a weekly basis, is I look at what sectors are breaking out. What sectors are showing relative strength to the market? That's going to inform me what I'm going to be trading for the next couple of days or weeks. And for instance, you look at, most people have been trading tech stocks for the last 2 years. More than that, but a lot of tech stocks for the last 2 years. And now everybody that's used to trading the Teslas, the Amazons, the Apples of the world are frustrated because they're not going up. they're not necessarily falling like some of these names, like Shopify, who's been basically cut in half, but they're not going up. And so for me as a trader, I look at it two different ways. What type of trading am I doing? So for my long-term investing, I'm mostly in shares. I don't try and dabble too much in, longer dated options. I'm mostly shares. Those are going to be my longer term conviction plays. For my swing trading, it depends. I generally will use options when swing trading. However, there are certain names that have really disgusting spreads, and so I have no interest in trying to trade options on those names. So I'll trade shares. And when I'm day trading, I'm exclusively trading options. So, what I do from a scanning perspective is I try and identify where the relative strength in the market is. Now, some people might say, well, if you only trade tech stocks, why don't you just trade tech stocks both ways? And the simple answer is it's not that simple. Because a lot of the times when the market goes down, you're talking about gap downs. And then it's much more difficult to trade to the downside when you gap down, because you're always going to get that reversion to the mean. And sometimes it continues, it fills the gap and it continues to go up. Other times it gets rejected and comes back down. And it's a lot more work to trade both ways. I personally like trading one way. I like trading to the upside. And, I hate to even use this saying, but there always is a bull market somewhere in the market. And it's true. So take metals, right? Copper, aluminum, gold, silver, all going up. Look at oil and gas, all going up. And so what I look for are, what are the names that are just about to break out? What are the names that have broken out? And what are the names that are lagging? And, if I miss a name, like, ExxonMobil was probably the first oil name that really started to break out. So what else is out there in the oil and gas sector that I can look at that's lagging, that hasn't broken out yet, that has the best setup, the best technicals? And that's where my eye will go to. Now, 2 years ago, I was not that type of trader. I would have been a frustrated swing trader that didn't know how to approach this market. But, 2021 taught a lot of lessons. So did 2020. And I think the people who are still in this market are the ones that learn those lessons. And the market is the forever teacher. It is forever teaching us lessons. And the ones that succeed and the ones that stay alive and don't blow up accounts are the ones that learn their lessons. And for me, I learn my lessons through journaling. I always understand what my position is, what my risk is, and where I went right and where I went wrong. And certainly where I go wrong, I want to make sure I understand why I went wrong and never hopefully duplicate that mistake. But the long of the short is, or the short of the long is, I trade options and shares, and I trade any name that has a bullish chart to the upside. However, the one caveat I will say is I do stick within a very small range of names. I don't like I said, I don't scan, but I do scan within my watch list. And so with my watch list, my master watch list might be around 250 to 300 names, but these are names that I'm familiar with. I've charted at one point or another over the last, year or so. And, occasionally new names do make the list, but that would be for more of a fundamental side or just an exposure side. But for the most part, I stick within my realm of knowledge. I certainly like to trade names that I know. I absolutely like to trade names that I consume their product because I know their product intimately. But that's basically how I trade.
Yeah, I like that a lot. I'm also in the same school of thought. I just play one direction, and you just, Bruce Lee said something like, "Don't fear the man who's done one thing, or 10,000 things one time. Fear the man who's done one thing 10,000 times." So I agree with you that I just like to play the upside. And really, the whole playing the downside, shorts, it seems to me it's like kind of going against the stream. Because, if you zoom out on the S&P 500 since its conception, it's just a steady bell curve to the upper right. And there's, if you zoom out far enough, those big bear markets are just You don't even see them. They're like invisible blips on the radar of this steady upper bell curve to the right, because the way I see it is like, the dollar is going to continue to lose value. And so money just wants to go into assets that are going to appreciate, and whether that's gold or crypto or stocks or real estate even. And so to me, I don't know. Maybe I'm a young bull. Maybe when I get old, I'll become an old bear. But I do love playing support resistance lines, and usually I just wait for a pullback to support or the trend line, and I'll go long. And by the way, because we're just getting to know each other, Dan, I play a very risky style of options. I play a very risky style of option strategies, which is naked calls. I don't play puts. Even during the coronavirus correction, I was playing calls on the bounce of support, the dead cat bounce. I never played to the downside, only calls on the bounces. But yeah, I mean, you want to find something that works for you, and you just want to stick to it. If you guys are listening and you're maybe following a couple of different people on Twitter or on Discord or Slack or wherever you're following these people, and you're going to get conflicting strategies and styles, and so you're not really going to get too much results or consistency if you jump around like a monkey from branch to branch. You just kind of want to buckle down and figure out who's got the results that you're looking for, and just study that one guy and follow him, until you really, really master it. And then if you master it, why do you even need to try another strategy if you've got something that's working? If it's not broke, don't fix it. By the way, Danny, thanks so much for your service to this country. I didn't get a chance to say that earlier. Really, thank you so much for your service.
Yep. Thank you.
Yeah, no, I appreciate that. Just to go back to what you just said, that's what I call system hopping. Now, here's the thing: I mentor and coach a number of traders, upwards of 80 now, and I can tell you that I don't necessarily teach them how I trade, because everybody's mentality, everybody's trading psychology is different. So that's why sometimes, and to your point, you saying following, somebody in Slack or Twitter or wherever you're getting your signals. I think as traders, we can only get signals for so long. At some point, you have to own your own trade. You can't take someone else's trade idea, because one or two things is going to happen. You're either going to make money or you're going to lose money. But in both cases, you don't own that trade. Someone else found it, someone else set it up, and you took it. And so what happens from a psychological standpoint is you can't own that win, and you're going to point fingers when you get that loss. And it's not good for trading. And that's why a lot of people blow up accounts, and that's why a lot of people quit trading. So I take a different stance. When I coach traders and when I go do my one-on-one sessions, I try and dive deep into their trading psychological profile. What kind of trader are you? What kind of person are you? Are you the type of person that wakes up at 5 o'clock every morning, meditates for 15 minutes, drinks a glass of water, does some deep work for an hour or two, and then does some exercises and maybe some yoga? Are you that type of person? Or are you the type of person that's going to wake up 10 minutes before the market opens and take any random trade of signal that you see on Twitter? I mean, there's two different types of people, and then there's a whole bunch of gray in the middle. And so I have to understand the person I'm working with to understand what type of trader they can be. And even understanding that, now you have to look at the person from a learning perspective. Everybody learns differently. I'm more of a hands-on learner. I never was great at reading a book and learning. I was more about taking a video course or doing a one-on-one session, with somebody and then learning directly from them. But everybody learns different. But one thing I can say is what's accelerated my trading career is working with other traders, is trading with other traders. It's not about, buying a service and getting signals and making a couple of bucks. That'll work until it doesn't work anymore. You need to be able to do the trades yourself, but you also need to verify those. For earlier on in my career, I definitely had a number of services that I was involved in where I would get signals, but I quickly learned that I needed to vet those signals myself. I needed to do the charts myself. I needed to find my own levels. I can't just trust what some rando on Twitter is going to put out there to trust that their chart is right. And also their style of trading might be very different, right? You know, they might be taking profit on the way up instead of compounding on the way up, right? There's two different strategies. And so if you don't understand what type of trader you are, you won't be able to get into the right service that's going to, you know, align with your trading perspective and your tradability.
I completely agree. Yeah. You know, speaking just to touch a little bit further on that subject, what did you have kind of a beginner's luck in the beginning, and then, you know, I think we touched on it earlier with the 2017 crypto run and how you didn't take any profits, and so a lot of those unrealized gains became less unrealized gains, and then you kind of were like, well, I need to figure out this technical analysis stuff. Did you have any have you ever blown up an account? Have you ever had a big loss, and just what were some of the I would say what are some of the biggest lessons you've learned since starting trading? And if you're taking notes, if you guys are listening, any of the audience, you know, you might want to take notes, because this stuff, you'll hear kind of the same thing from all professional traders, and you need to be aware of it so you yourself can avoid these pitfalls that are all too common.
Yeah, I was lucky, man. I first off, I've never blown up an account because when I first started trading full time, and, you know, I traded for a while part time, you know, here and there. I take a swing trade, you know. But when I first started trading full time, meaning I'm taking trades almost every day, I was actually trading with a group of friends. I was lucky enough that I was invited into a WhatsApp group a few years ago. And it was just somebody I knew from high school. I trusted him. I hadn't connected with him for a while, and he invited me into his group. And it was about like 20 guys and gals in the group, of which about 10 or 12 of them were really good traders. And I just, for a year, just picked their brains. I really just learned, you know, a lot of sharing of information, a lot of, you know, sharing of ideas. And I basically, that was the start of me building my rule set. And I don't trade without rules. You really shouldn't live life. You really shouldn't do anything without rules, right? There's the rule of law. You know, there's the rule of the road. There should be rules in trading. And if you don't have a rule set that you're working off of, find one, search for one, Google it, you know, and download it. Get an idea of what a rule set looks like and start to modify it according to, you know, your trading values. You know, to give you an idea. You know, I look to undertrade. So these are some of my rules. I look to undertrade. I don't overtrade. You know, overtrading leads to losing money and bigger losses. I've never had like a really big loss because I've always applied proper risk management. I always put stop losses in. If a trade doesn't go the direction I think it's going to go, I'll stop out pretty quickly. And I'll take that trade again if it aligns with my original trade plan. I'm 90% technical trader and like 10% fundamentals. I'm not really super interested in what a company does in terms of like day trading and things like that. Well, of course, when you're talking longer term trading, yes, you need to have an understanding of fundamentals and all that good stuff. I try, especially for options trading, I try and do limit orders, not market orders. Especially for names that have a wider spread, you do not want to market into those names. You will be down on your position right from the jump, and so you're starting in the red. So make sure you're taking limit orders, not market orders. You know, again, just like watching, something I've really gotten much better at in the last 18 months is watching money flow. So I use a service called Black Box Stocks. And they give you really good options flow data. So it's like basically sitting behind the chair of the top hedge fund analyst and trader, right? You're seeing order flow as it's coming in, puts, calls, and dark pool data. And learning how to watch options flow and seeing how it aligns with technicals is an edge. And if you want to be successful in this market, you have to start stacking your edges. Everything is an edge. Having a repeatable pattern is an edge. Entering trades at a certain time is an edge. And a lot of it boils down to journaling. You need to journal your trades, every single one of them. And, I think starting off journaling by hand is fine, but you need to get digital with your journal because you need it to be searchable. You need it to be sortable because the devil is in the details no matter what you do in life. And especially in trading, you want to know where you're deficient. You want to know that every time you took a trade on Boeing, you lost money. Well, guess what? If you lose money every time you take a trade on Boeing, don't trade Boeing. That's got to be a rule. So, if you lose money every time you take a lotto trade on Friday, then don't take lotto trades on Friday. Again, this is about risk management and journaling and understanding the data. If you understand what gives you your losses and you find out how to mitigate those losses and minimize them, and you focus in on the types of trades that are winners for you, maybe, 70% of the time you take a bull flag breakout, you make money. Well, guess what? Start only looking for bull flag breakouts, right? It makes a lot of sense. Sometimes it makes too much sense. But, especially somebody that's newer to trading, you're excited. You've got this new skill. There's so many trade ideas out there. You want to take every single one of them. And by doing that, that's how you blow up an account. You have to be sniper mentality. You have to be, focus on 1-2 trades at a time. Don't try and take 15 trades. Don't try and manage an account with 30 names. You're gonna lose your mind doing that. You have to be really focused. You have to get that that sniper mentality versus the shotgun mentality. You pick these trades off one at a time. You collect your money. You say, thank you very much, Mr. Market. You don't get married to your names. That's another one of my rules. Never marry your positions because, I've seen too many traders, especially on Twitter. You have a pretty decent following. And every once in a while, I get these messages about NNDM. Is a name that Kathy Woods is big on. I think it's a 3D name. And every month I get, hey, where's NMDM? When is it going to turn? And it's like, man, you can't get married to that name. It's going to go up when it's going to go up. It might be next week. It's probably going to be next year or maybe 10 years from now. I don't know. So never get married to your positions. I can go on and on about my rule set, but in the end, it really comes down to that. You need a rule set.
That's great. Yeah, I think of every stock as really just a pump and dump scheme, unless proven otherwise. Look at Zoom, $500 stock last year. It's back to around $125 trading, and it's probably going back to 100, So, yeah, don't get married, and I think we just had a crazy run in the market the last 2 years with coronavirus and what it did to rates, and the market just really took off, and it really was just from what the Fed was doing and the low rates and stuff, and now that is kind of easing off. You don't really look at the macro conditions so much, Danny, or do you? I think the president's coming out today with the State of the Union address. What's that going to do to the markets, if anything?
Sure, I pay attention. I'm not going to say it doesn't factor into when I'm going to trade. If there's a Fed meeting or a president's talking or some kind of exogenous event happening, I'm going to be very wary of my positions. And if I have positions on, I'll hedge them. But yeah, I don't really outside of what's happening right now in the Ukraine, I don't let these external, these external forces, these external news events affect the way I trade, because I'm more of shut the news off, shut the TV off, shut off Twitter and all your news streams, and just focus on the chart. The answer is in the price. And if you look for answers in other places, you're going to get lied to one way or another. So I prefer to look at price only. Price doesn't lie. But certainly, yeah, I mean, I'm of course going to, listen, I could tell you like a month and a half ago, I started to really watch the defense sector stocks, Raytheon, RTX, Lockheed Martin, LOC, and Northrop Grumman, LMT and NOC. Right? Why? Because if the beating of the war drums is going to happen, then the defense stock sector is in play. Now, it's not a sector I want to invest in, but that is just how the market works, right? The war drums are being beat, and defensive stocks are going to go higher because if war breaks out, those stocks are going to explode. And guess what? No pun intended, they did explode. And it's certainly not the type, I mean, I'll track them, I'll post them, I don't trade them. It's just from a pure principle standpoint, based on the fundamental nature of those companies. But the reality is a chart is a chart is a chart. And that was, along with oil and gas, again, Russia is a big natural gas and oil producer. And so sure, that's going to affect the markets. Sure, it's going to help surge the price of oil and gas products. So, I mean, you have to look at the market from a black and white standpoint. And, the longer you're in the market, the more you see how these external events affect different prices of different sectors, the more muscle memory you're going to build in your mind to say, I've seen this before. I know how this story plays out. And so by seeing it before, I knew how it was going to play out, and I knew where to properly position myself accordingly.
That's awesome. Hey, and if it makes you feel any better, Danny, I've blown up multiple accounts. I've blown up my brother's and my father's account learning how to trade.
It certainly doesn't make me feel better. But listen, I mean, it's a very common story, right? There's like a statistic that people love to throw out: 90% of traders fail, right? It's because 90% of traders that fail give up because they weren't taught the right way. They didn't know the right system. They tried one type of way to trade and it didn't work for them and they gave up. It's like, I can't come up with a really good analogy for it, but it's the wrong mentality. I mean, if I gave up on everything that I tried once and failed at, I would never succeed at anything, right? But you have to look at failure as a learning lesson. It's like anything in life, right? If you fail, all right, well, why did you fail, right? What was the reason? Figure out why, figure out the why, and figure out then the how to fix the why. It's the same thing with trading. I think people overcomplicate this too much. Yeah, it's definitely not easy to learn, but there are ways to learn that make it easier. It's just a lot of people like to overcomplicate things.
They sure do, including myself. I was just thinking, next time I'm in New York City, are you in the city or what? Or where are you?
I'm in Brooklyn.
Okay, nice. Next time I'm in the city, I have to. You have a favorite? You have a favorite place, like a favorite restaurant or a favorite bar?
Depends on what.
Depends on what you're hungry for. I've got lots of favorites. Give me an example. Give me
I really
a
like
cuisine.
Italian.
Then you would have to go. Well, there's a spot called. What is the name of it? It's going to slip my mind, but it's a pizzeria. So definitely Little Italy, but there's also another Little Italy in the Bronx on Arthur Avenue. The Little Italy, that's the traditional Little Italy, is a lot smaller than it used to be. But there is a place on Mulberry Street, and for the life of me, I can't remember the name of the pizzeria. It starts with an R. I'll figure it out before the end of this podcast. But they do this kind of like spiral pesto red sauce pizza that's like out of this world, super unique. But their pasta dishes are really, really good as well. And there's a cheese place called Artisanal that focuses more on cheese, but does a lot of traditional Italian plates with it. So I think those would be two high recommendations. But there's a lot of really good Italian food, both traditional Italian and what I would consider like new Italian in the city. So, but I'm more of a Brooklyn boy. So I do go into the city, but I'm mostly, if I'm going out to eat, I'm mostly going out to eat.
Yo, welcome to Brooklyn. Fuck you. Hey. No, I'm just kidding. No, I lived in Prospect Lafert's Gardens once upon a time. So yeah, New York City is amazing. Everybody should live there once, but leave before it makes you too hard. But no, it's a beautiful city. If you guys get a chance to go, you gotta go. It's the Big Apple. Yeah, I actually looked into getting an office. This is a little bit off subject for the audience and around trading and getting an edge. But I looked into renting an office in One World Trade Center on the 85th floor. It's amazing. Amazing building, amazing views.
Oh, yeah, totally.
But, I just was like, you know what? I don't really need to. It was like it was just extra, too flashy. I was like, do I really need this? And the answer was no. I'm down here in West Palm Beach, Florida, but I just grew up in Florida, so kind of bounced around a little bit. Lived in New York City, lived in LA, and lived in Hawaii, lived in Seattle, lived in Mexico, Colorado. I was kind of a hippie guy for like 10 years, all my 20s. No particular direction, just kind of blowing with the wind. And was actually a yoga teacher in LA when I met my friend Stefan from Berlin, Germany. He's an immigrant. He's a fantastic options trader and very funny guy. He got me into options, and he would just scalp the S&P 500 SPY, and I watched him do it for like a year. And watched his progress. Never took a trade, and finally, downloaded E-Trade. I got the app. I got the broker, funded it, and immediately started losing money. That's not true. I got a little taste of success. I think I had beginner's luck as well. I had a taste of success in the beginning. I made I'd do a $500 position, and I'd be up 100% in 10 minutes, and sell, Good thing about SPY is it's got a tight spread, so you can market order in, market order out. I'd make $500 in 10 minutes, and I'm like, oh, I'm never going back to work again. I'm going to do this, and I'm going to travel the world. Fast forward 3 years, finally kind of found my way to my winning. I would call it, my own winning strategy, formula, and rules that I teach, and people subscribe to our group for these alerts. But I want to actually touch more on what it is that you offer in your newsletter, and how can people sign up, and how can people learn from you, Danny? Because I think actually you're one of the leaders in the space, and that's why I felt so lucky to have you on the show that we're doing. Because the whole point of the show is to sort of get the message out there to people who are either already in the market or interested in the market. What can you learn from the pros? And take it from us guys. We've been doing this a long time. Some of us have had to learn through a lot of pain and suffering. But if you actually take notes and you're following along, you'll be light years ahead of the guy next to you.
Yeah, I appreciate that. So, I have a newsletter that goes out every Sunday evening at 6 p.m. Eastern Standard Time. I've sent out, probably about 30 editions. I've only missed 1 week because I was on vacation. Actually, 2 weeks ago, I was up in the mountains, got an Airbnb in the mountains, and no internet, barely a signal. So it was a slog to get charts out. So I basically took that week off. But pretty much every week, it's a free newsletter. Easiest way to sign up, just go to my Twitter page. That's the PupOfWallStreet ST. Go to my Twitter page there. Right under my bio, there's a way to sign up. Like I said, it's free. I have about 4,000 or so subscribers. Very low unsubscribe rate, very high open rate. I think my open rate average is 47, 48%, which is pretty good. And so what I do is I take you through the weekly indexes, so SPY, the Qs, the IWM. There are some premium portions to the newsletter itself. I'll talk about that in a moment. But I'll go over the economic calendar for the week, the sectors that I'm going to be watching. I'll always have one particular name of that that's my trade of the week. This week was FCX. That's Freeport McMoRan. It's doing really well. It's been one of my best trades probably for the last 3 months. They are a copper play. So I'll break down weekly, daily, 30-minute chart. I'll give you some news. I'll look at the options flow and dark pool data, see what's going on there, what strikes are hot. When we're in earnings season, I'll always have an earnings calendar up there. I'll tell you what I'm looking for and what I'm watching that week. Every weekend, I put out about 25 to 30 weekly charts. I'll always drop that in the link to that particular post in the newsletter as well. I'm really big on reading, so I'll throw in my thread of the week. This week's thread of the week was from Sahil Bloom, who wrote about the deterioration of the Ukraine-Russia situation and talked a little bit about SWIFT. So I thought SWIFT was probably something that most of every listener here and most listeners that are in the financial space should understand what SWIFT is and what it is. So I shared that. And then I do a ton of spaces throughout the week. I do probably 3 to 5 spaces, about 7 to 10 hours a week. So you can usually find me on Twitter Spaces in any of the financial names. I'm actually going to be on tonight, actually. Every Tuesday, I do a 12 o'clock live charting space, and I do a 8 p.m. Eastern. I do a market overview with some of my friends. So, that's pretty much my newsletter. It's free. It goes out every week. Like I said, Sunday, 6 p.m. And then there's some links that link off to my service, which is partially mentoring and coaching, as I had talked about earlier, but also the members of my group, they understand how I trade and they know what I look for. And so I have like my top 10 conviction play. These are my long-term plays. I do a weekend video, which basically sets you up for the next week, which goes over anywhere from 15 to 20 charts. I share all of my TrendSpider scans and watch lists that other TrendSpider users can import into their system. And every morning I send out a members newsletter or a members email talking about the state of the market, pre-market, what's going on, any big news events, what are my trade plans. I usually have 1 or 2 trade plans every day. And then throughout the week, I'll keep everybody abreast of what's going on with those trade plans. Been able to pretty much nail the market for the last 4 to 6 weeks, which is nice because it's definitely been a struggle. But like I said, using my process, I'm able to find, the market leaders at the moment. Doesn't necessarily mean we're going to get a ton of follow through, but, we're taking quicker profits these days. It's just good risk management. And so that's pretty much my newsletter. And then my university is Pup University. It's pupcharts.com. That's where you could sign up for one of my member services or sign up for my coaching and mentoring service. So
make sure you guys all go check out Danny's newsletter. Check out his website. Maybe you guys want a technical analysis class, etc. He's a very great teacher. One of the biggest names on Twitter for trading to learn from. Definitely go check him out. And it was great having you on the show today, Danny.
Yeah, my pleasure. Thank you so much for having me and giving me the opportunity to tell my story. And good luck to you guys as well. And good luck to everybody in the audience. And feel free, if you have any questions about anything I went over, go ahead and DM me on Twitter. My DMs are open. I pretty much respond to everybody who DMs me. Might not get back to you right away, but generally within a day I get back to you.
That's great, man. That's great. Thank you.